Hi everyone, Friday, October 28th. Thank you for joining me. As always, Three Things with Spyglass Lending, where we delve a little bit deeper into what's going on in the mortgage industry, not the usual fluff and rigmarole you hear or clickbait that you're always enticed to talk about. But really, we're going to get to the gritty. We're going to find out what's actually going on in the industry. Let's get right to it. Right behind me on the board, MBA, 50% downward. Well, what does that mean? MBA not standing for Master of Business Administration this time around, actually the Mortgage Banker Association. And what they're telling you is that between 2021 and 2022, it has been a 50% decline. Well, we've got a couple months to go, but the expectations are already there. A 50% decline in mortgage activity. That is gargantuan. Over $4.5 trillion in mortgages produced in 2021. We're looking at half that for the end of this year, 2022, and guess what? Not particularly unexpected, but a 75% decline in refinances as part of that number. That is huge. That is precipitous, and there were a ton of brokers, bankers, lenders out there who were focused specifically on refinance. Guess what? That has all been pretty much dried up. 3/4 of it gone with expectations moving into next year even further down, right? So not going to see a 50% drop next year, but they're still projecting a leg down. And that's big because if you're looking at what was $4.5 trillion down to about $2.2 trillion done, and you're still talking about a 10 to maybe 20% drop, which is the expectation for next year, that's a significant leg down as well. But it also comes with what they're predicting by the end of 2022, to the end of 2023. The Mortgage Banker Association is predicting 5.4% on the interest rate. That is really interesting and a little bit alarming if you ask me because, well, let's just call it like it is. We're sitting at 7% right now on the average for the 30-year fixed, right? Still got a couple months to go. Let's see where it lands at the end of this year. But they're predicting that we're heading, of course, as a lot of people are, into the recession in early 2023, middle of 2023. But by the end of the year, rates will have settled and come back down. But I want you to think about this. A lot of people predicting at the end of 2021 that by the end of 2022, we'd be somewhere in the 4.5% range on interest rates. Hey, yeah, they're going to go up a little bit from the 2.5%, 3% free money that was given, 4.5%. Well, now we're sitting at close to 7%, as we all know, and we've still got 2 months to go and see where that lands. Let's see if they're really right about the 5.4% prediction they're talking about at the end of next year. And finally, though, because I want to end on a little optimism, and hey, it's a fun holiday coming up, let's talk about a little Halloween reprieve. And no, not because it's Halloween did we get that reprieve, but there has been a little bit better news in the markets this week. Certainly the Dow, the NASDAQ, the S&P have all gone up massively in the past week. But this has had a nice effect on interest rates. This has a nice effect on the 10-year Treasury yield, which is hovering already back down near 4, and maybe we'll see it drop below 4 again, which would really be nice. And rates, again, they are still around the 7%, but they have come back down pretty significantly this particular week. It hasn't quite affected the non-QM market, but hopefully by next week, the non-QM market will reset and they'll bring their pricing back down a little bit. But yes, I mean, interest rates still for the 30-year fixed are around 7%, but hey, they did give us reprieve. They were not this crazy runaway train heading to 7.5 or 8. Again, unfortunately, though, expect that there might be that bounce back towards the end of this year, and we're still heading in that direction, but at least for this week. If you're out there looking for houses, if you are still one of those people who are refinancing, probably now is the time to do it and lock it in. Thanks for joining me. This has been Three Things with Spyglass Lending.